What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to take a quick look at a company as per request, ORGN Materials Incorporated, ticker symbol ORGN, listed here on the NASDAQ. Now, this company had a merger back in 2020, and that is when they got listed here, and you can see that we had a little bit of a run up here after inception, and then we were kind of leveling down, as you see, kind of staying below this 20-day moving average. This company actually just recently began bringing in revenue, and now boom, we have a big chunk down. We'll get into that in a second. So right now the stock is down to $1.36 a share. It was down only 1 cent today, even though we had a big pullback here, about 0.75%. And as you see, 52-week low was hit after this announcement, down to $1.18 a share. So basically what happens now is if you draw this trend line down, it lines up perfectly with the bottom of this big drop here back in the beginning of August of 2021, and it lines up right here with the low that just hit in the first week of August of this year. So now what that means is this is your long-term support level, right? From inception, the bottom here, let me zoom in for you. See how I have it clipped into the bottom of that candle right there, and it lines up with that candle over there, and it just happens to run into that candle over there. So again, this is our long-term support trend line, meaning if the stock continues to sell off and pull back here to the low dollar and then breaks that trend line, well, then it's going to chunk well down sub $1, similar to something we saw with Nikola. But if we go back here, we can see that nothing was coming in, even though the company was losing supposedly less than analysts expected. And now you see here estimates of a little under 1.3 million. The company came out and posted about 1.7 million. And now you see as of last quarter, August 9th, revenue estimates of 5.26 million. Company came in with a touch below 6.9 million. So the company now has revenue coming in. If you go back here, if you click on the news articles and scroll all the way back, even going back to right when they got listed publicly, you'll see a lot of articles like this. See, enter into strategic partnership. You'll see so many articles of them. Mitsubishi, they apparently, are licensing out their IP and working and collabing with a bunch of other companies, and they're also apparently signing these quote-unquote strategic partnerships with a lot of other businesses as well. So revenue has been growing. You cannot deny the growth of the business. And now if we look at next quarter coming up here, estimated for about the beginning of November, you'll see that revenue estimates are up to now 14.88 million. So definitely forecasting bigger and better things for this stock here. But right now, the market cap's sitting at 195 million. We have a PE of about 7. And if you come down here, if we look at the EPS, you can see, yes, it is negative. However, the losses were less than analysts expected. And again, now we have some revenue coming in for the company. So, what's going to happen here, and what was this big drop? Well, this big drop here may be something to be concerned with. Okay, first of all, they brought over Pam Haley, apparently. That's their new interim CFO. Didn't really react too much because of that. But what happened was, here we go. Shares of ORGN Materials coming to an all-time low Thursday after the company delayed its Origin 2 project, which was going to be its second facility, and also raised its budget. Okay, so the stock was recently down 67%, dropping to $1.45 after sliding to $1.24. Shares are down 70% this year. Sustainable materials company, push timeline back, and the budget. There you go. Company expects project to be completed in 2 phases, with the first phase completed in late 26 or 27, and the second finished in 2028. Origin previously anticipated the project's completion in mid-2025. And also it says here, first phase would be about 400 million, with 1.2 billion allocated for the second phase. Company initially planned total capital budget of 1.07 billion. So basically what happened was, now supposedly this project that was supposed to be completed again mid-2025 is going to take 2 extra years longer, and of course cost much more than they anticipated. So that, of course, is negative news, but more importantly, I think it took a massive drop because now people are potentially viewing it as the company could actually be charged with misleading investors and shareholders. So now I think that's why it chunked down so much, because if we look at the numbers, which we'll get into in a second, you could potentially say that the company actually is significantly undervalued here, in my opinion, in looking at the numbers at this level. However, it does have the potential to go even lower and make new all-time and 52-week lows just based on that announcement, because now you have, again, potential litigation that can come against the company for supposedly misleading investors if they go down that route. But of course, on the flip side, you also have a situation where right now the operating expenses are outweighing the revenue that's coming in. So in order for the company to build those new facilities that they thought were going to be available in 25, now they're not going to be available till 27. So what that's doing now is further pushing back the profitability U-turn that was going to take place in 25 is now not going to take place until 27. You understand what I'm saying? So they will now remain inefficient, you could say, in the numbers because the project is delayed roughly 2 years. But again, right now, $195 million market cap, and if we switch over here, we look at the overall view here, and you can see, again, the cash and cash equivalents has been increasing, as you see, from 21 to 22, going from about 47 million up to north of 108 million. But the free cash flow, of course, basically dropped that same exact amount down to minus 109.2 million. So that's why it's like for every dollar they make, they're losing their dollar. So that's why right now it doesn't seem sustainable. And I think that's why the stock took such a big hit on that delayed announcement. And of course, the expenditures, right? Because apparently it's going to cost a couple $100 million more than they anticipated. But if we look here, we can see short-term assets and long-term assets are both outweighing short and long-term liabilities, respectively. So that obviously is a healthy green flag for the company, in my opinion. And if you switch over here to the income statement, you can see how the cost of goods sold has now outweighed that. I mean, having revenue increase from 1.7 to 6.9 million is definitely a positive. But of course, you have the cost of goods sold and then the operating expenses as well. You can see how they jumped up now. It's costing anywhere from 12 to 14 million a quarter now for the company to just operate itself. So that's why this is going to take a little bit of time for the company to really turn around these profitability figures. And that's why, again, I think that they took such a massive hit because, of course, delaying the efficiency and the productivity of these materials is definitely going to be more negative than positive. And, of course, if they potentially misled shareholders, then that's going to be a serious issue as well. And I know I didn't say it, my apologies here, but this is apparently a carbon negative materials company engaged in providing sustainable materials by replacing petroleum-based materials with decarbonized materials. So essentially like they say here, like such as sustainable harvested wood and agricultural waste, wood waste, right? It's like almost like that, like the imitation plastics and like the corrugated cardboard, right? So that's what this company is involved in, which is fine. However, the one thing I will say is, of course, that's a very interesting sector, right? And the company is based out of Canada. Oh no, well, it's headquartered in West Sacramento, but I believe it's a Canadian company. I don't know. Correct me if I'm wrong. But what was I going to say? But yeah, I know that Canada is kind of following that whole kind of like green energy vibe thing going on. So that's why I know like a lot of these more quote unquote developed countries are now trying to push towards this whole green renewable energy thing. So that's why more money was going into like solar, and that's what I mean. A company like this that are able to take like waste or discarded products and like revamp them into new products and new uses and supposedly decarbonizing them, and it's good for the environment, right? So in a nutshell, like it sounds like a good idea, but of course, again, that recent announcement what was just horrible timing for the stock, especially if you go back and you look at the news articles, you'll see that I think it was the end of June was when the company was added to the Russell 2K, which obviously tracks small cap companies. And then they come out and they make this announcement saying everything's delayed, 2 years, and it's going to cost, an extra arm. So that's why, again, and I think the legal aspect, of course, plays a role in it as well. The one thing I have noticed here, though, is that assets, if you look here, have been consistently decreasing, minus this quarter of a slight bump, but they've been consistently decreasing quarter over quarter. However, the liabilities, if you look here, going from almost 207 million and then dipping below 200 million, then below 150 million, and just continues to chunk down. Look at this, 116, 92, 84 million. So again, the equity is the assets minus liabilities, and the company not only has positive equity, but actually has been consistently growing it now quarter over quarter. And as we see here, this debt has actually been kind of maintaining between, I'd say, about 7 to almost 9 million. But the net debt of the company, look at this, has been consistently decreasing from 437 million, below 420, below 4, and then to about 350, and then down to 250, now sitting at 210 million. And if you'll notice, as the equity of the business has been increasing with the overall debt decreasing, what that does is that obviously makes the business more valuable. And as you see here, the book value per share, even, remember, this whole time, this company wasn't bringing in any revenue, right? They only started bringing in revenue the last 1 to 2 quarters. But as you see, because of this, the book value per share has been slowly increasing to 15, 18, 46, 7, 264, 273, now 274, right? So if the company shut its doors and liquidated everything in their name and paid it out to shareholders, it would be equal to $2.74. And as of right now, the stock is $1.36, which means you're buying it for 50% of book value right now. Now, this is why a situation like this scares me, though. Because, first of all, you're kind of telling me it may remain volatile and rough for the business for potentially the next 1 to 2 years before this new facility is built. And again, efficiency makes a U-turn, and they could potentially lower their expenses and increase profitability, right? So now that's delayed. Plus, you're telling me it's going to cost an extra couple of $100 million. So that's why, again, a situation like this, you can look at it. It's like, yeah, you may have lowered your debt by about $200 million and change, but now you're telling me this new facility that you absolutely need to increase efficiency is going to cost an extra $400 million. So, like, while this is a positive, you still have potential negatives that are outweighing your positives. And again, I think that's what you're seeing here in the immediate short term. But again, see, as you see here, price to book ratio, look, trading half. It's trading half book value right now. So that's why this is a very slippery slope, in my opinion. And again, it may potentially be a buy, but we may also potentially get a better price because they did initially bring it down to 118. And then you can see that they rose it up for about 4 weeks almost in this upward channel, which basically almost looks like it formed a big bear flag. And now, as you see, just recently in the last couple of days, it has broken and closed below that bottom support trend line of that upward channel, and now it's heading back downward. So I would say best case scenario, if you're in the company, obviously the lowest price you would want to see is a pullback to about 118 here to potentially form a double bottom and give you some sort of technical analysis bump. However, this is the long-term support trend line, and again, it came down right to it when it lined up, and then after this big bounce for over a month, it is now breaking down and starting to pull back as well. So that's why, people may be looking for a pullback here to about this 130 fib level and have a bounce. But as of right now, again, the numbers may support that bounce in theory. However, just the whole psychology behind the company with this BS news article coming out now saying that everything is delayed and it's going to cost more, it's more of a negative than we may want to put on. And I can appreciate the fact that, yeah, they've been signing these new deals. You may own it. You may think it should go up. And honestly, it probably will go up, in my opinion. Over the long term, it looks like a decent play. However, here in the short term, my point is, especially with markets dropping now the way we've been seeing them, if markets do continue to sell off, something like this will probably, in my opinion, inevitably continue to pull back. And as you see here, now we're talking, 108, 107, down here, 103. And again, you could potentially have a flash break of this long-term support before it pops back up. So you may be able to buy this stock right here for actually like 20, 30% cheaper than where it's currently trading. And again, we always talk about pricing and timing. So that, in my opinion, would be the 2 cents that I add to the situation, right? Looking at the revenue coming in, and we'll look at the forecast as well. I forgot to look at the forecast. But first of all, one sec, I'll come back to that. But if we bring up the forecast here, you can see we have 5 analysts covering this stock right now, 1 with a strong buy, 4 with a hold. We have price targets ranging anywhere from $2 to as high as $10 a share on this stock. Again, trading at $1.36 right now. Average price target of about $4 a share. Now, again, they were bleeding less than analysts expected over the last several quarters, and the revenue has been coming in above analysts' expectations. But now look at this. Now they're expected to jump up as we look to a little below 15 million. And then the next quarter, to close out 2023, it's up to 23.75 million. Okay? Now, for the year, that's 48.43 million. However, for this first quarter on 17 million, then they posted 6.9. Right? So if we add those up, we're at what? 8.6. And then if we add this to 14.89, now we're at 23, like 6. And now if we come over here with another 23.7, now you're at 46, you're at 47.3. But for the year, they're expecting them to post 48.43 million. Now again, if they slightly miss this number, is it going to be a big deal? Probably not. However, what concerns me, if you notice, moving forward, revenue is expected to jump over 100% and get above 109 million. However, then it only goes up to 116, and then it only goes up to 119. So they're expecting the company to grow its business 400% over the next year or two. However, then they're expecting it to completely plateau. And then if we look at the EPS estimates also for the year, we can see that for the annual EPS estimates, the company has completely missed the mark for the last 2 years. However, now for 23, they're only expecting a loss of 31 cents, but then moving forward with an increase in revenue, they're going to lose 38 cents. And then 2025, supposedly when this facility was supposed to be built, they're still expected to lose 28 cents. And then moving forward, as the business is supposed to be growing, and it looked like the debt was consistently decreasing, now apparently going into 26, the company will be losing even more money per share, going from minus 28 cents a share to minus 33 cents a share. So I don't know, the whole thing just kind of throws me for a loop, and I just don't know if I would personally feel confident stepping into this situation. Also, I'll see if I can try to find the article here in the moment, but also, here we go. Shares of bio-based plastics firm ORGN Materials fell 56% pre-trading on Friday after the company announced a pivot into the biofuel market the previous day, and also said it was delaying its project. So again, first of all, again, for like the 5th time I'm now saying it, they delayed that second facility, and again, that is potentially viewed as like some serious financial fraud potentially and misleading of investors and shareholders. I'm telling you, something may potentially happen with this company, which is why anyone who had a position may have just taken the money and run, knowing that there's a storm brewing ahead for this ORGN Materials company. But the ORGN 2 project, the company's second commercial scale plant, is now divided into 2 phases, expected to complete 27, and the second in 2028, previously penciled in for 2025. That's a big difference, being off by a couple of years. A couple of months, not really a big deal. A couple of years is a big setback. Also raised the capital expense estimate with the first and second phase expected to cost $400 million, $1.2 billion respectively. The original budget for the entire project was $1.1 billion. Now it's $1.6 billion, and it's going to take 2 years longer. So yeah, the stock took a hit. Again, maybe below book value and could be viewed as undervalued when we looked at a couple of those fundamentals. However, again, this is what really is beating up the stock here, and it's almost understandable in my opinion. The company also flagged that the project requires engineering rework due to increased cost of labors, materials, process inputs, and metallurgy. Abandoning bio-based plastics as a focus area, Origin said it has decided to diversify into advanced biofuels. Now, this is what I mean. This is how they throw you for a loop as well. And then apparently you have this analyst at Raymond James throwing in his 2 cents, saying that the pivot to biofuels had never before been discussed as a management priority. So now you also have this potential like facade of this company, right? Like this whole time they're over here playing into the whole green energy renewable sector, tapping into that market, saying that they're going to decarbonize these materials and, you know, make renewable materials that are just as good, if not better, than plastic and wood and all this. Now all of a sudden you're just pivoting the entire business model, and now you're going to go into the biofuel sector. So I'm not exactly sure whose idea this was, but they may have completely killed their entire company here with this announcement. Says the abrupt pivot into the biofuel market is jarring for investors who had been accustomed to looking at Origin as a specialty biomaterials story. Excuse me. The West Sacramento, California-based company posted second quarter revenue of $6.9 million, missing average analyst expectations of $7.03 million. So TradingView is showing us 2 different numbers here. But again, see, a situation like that, it just I can just feel the negativity as I go through these news articles, right? So that's what I mean. All of a sudden, you were way off with your timeline and your cost basis on your facility, and now on top of it, you're just completely going in a different direction, and now you're moving into a completely different sector. So I can understand as to why a lot of people may have just jumped ship. And it's very understandable, and that's why I feel like even with this earnings coming up here in November, if they do beat analyst expectations, I'm sure off the positive catalyst and the news, you know, the stock may see a bump and even go into a little bullish momentum, little rally there off of that good news. However, now in the immediate short term, I don't know. I just have a feeling. Again, this is just my opinion. Whatever you do with this information is entirely your own prerogative. If you have a different slant or view on this situation, of course, let us know down in the comments section. I always keep an open mind. If there's something I missed, something that you may see happening for the company over the next 1, 2, 3 years that could really pay off. Because again, we see that revenue is expected to grow, right? So over time, the stock should do well. However, it's just these recent announcements that have completely just thrown a wrench into the machine itself, and now just kind of stalled everything down. So that's why I'm saying, in my opinion, I really do think it now pulls back and sells off, and I just think you can get this for a better price. Whether you want to wait till you get to this 118 potential double bottom to see if they do that, or again, I don't know. I really have a feeling it drops down here into the low ones. But you know, this is what sucks, because the fundamentals were looking pretty good. They really were. Decreasing liabilities and debt. It's trading again half the book value supposedly on paper. I mean, these are some big positives. However, these new announcements may have absolutely destroyed this company. So if you're involved with it, you know, if you want to weather the storm and hold long term, I mean, I wish you well. It started out as a good idea, and again, you know, when it went public, it may have initially been overvalued, like so many new companies we see are, and kind of had that consistent sell-off. But also at the same time, I feel like it kind of found its footing down here at about $4 a share, which, again, looking at the numbers, is what? It's about 1.5 times book value. So that's why it's kind of understandable that it kind of like found that bottom at like 3.5, 360, and then kind of like slowly was channeling upward. Understandable. It did look like from here it could have actually worked out nicely. However, again, now you're pushing your timeline back 2-3 years, and also, by the way, it's going to cost an extra $500 million. Oh, and by the way, we're not even going to be doing what we said we were going to be doing in that facility. We're going into the biofuel sector. So, you know what I'm saying? That's why I completely understandable that this thing pulled back. And if you want me to say, oh, it's a buy because it's low in the numbers, it's going to go higher, honestly, I'm a straight shooter. I cannot feel comfortable saying that. because I've seen similar situations like this, and this thing could really get worse before it gets better. But switching over here quickly to stock charts, you can see, look, after that big announcement, the RSI dropped down, looks like to about 12. And during that whole bear flag channel, that's how long it took, almost a full month, for the RSI to get back above the benchmark low of 30, indicating quote-unquote oversold, or so they say. Now the RSI has pulled back here with the stock, and now it's sitting at about 30 and a third. However, again, it was below 30 for over a month. And right as it got above, it immediately retested, and again, it's doing it again. So that's why this right here, the RSI, cannot be viewed, in my opinion, as a solid indicator here. After seeing what I've seen since this announcement, with the way the RSI has stayed down here on the daily, you can't simply look at something like this and say, oh, they crashed it down, it's oversold, it's a buy. In my opinion, that is just a piss-poor way to do your analysis. It does look like the MACD has been steadily climbing, though. However, we may potentially be looking like we're curling and heading back down to the downside. When a stock drops or pops so much, you can see the Bollinger Bands kind of have these ballooning effects. And then this whole month that the stock was kind of remaining sideways in that upward channel, you can see the Bollinger Bands have now tightened up, and it's been trying to bounce off that mid-Bollinger Band, but as of late rejected on this candle and pulled back. So we'll probably go down to $1.31, which incidentally is basically right near that fib level of 130. So that, in the immediate short term, if you're looking to trade, in my opinion, that's your key level right now. If it breaks, probably 118 again, in my opinion. And looking over here on the weekly, you can see also, again, the RSI took a massive chunk, as you see there, dropping down, looks like to maybe about 20, and then kind of has been slowly rising, but still sitting below 28 after all of these weeks. So that's why, again, looking at something like this, simply saying, oh, it's oversold, it's a buy, in my opinion, I don't think it's worth rolling the dice. However, if you do step in and the freaking thing pops to like 160, hey, listen, more power to you, congratulations. I hope everyone makes $1 million. But looking at the MACD as well, you can see that it really chunked down and began to pull back, and we could potentially look like we're starting to curl there. So, of course, only time will tell. But again, I'm just giving my opinion here. This is just how I'm looking at the situation, and I have already said multiple times that the numbers do relatively look attractive. However, it's the psychological, it's the news cycle right now that I feel is going to continue weighing on the company and adding to the sell-off. And that's pretty much all I have to say here about this company. So if you want, keep an eye on it. We'll see if if it pulls back to these levels we're talking about. If it does really start to chunk down and markets begin to markets remain volatile and continue to sell off, then we'll see if the company breaks down into the low ones, and then we're going to have to keep an eye on this support trend line as well. So very similar to a nickel play with a close price as well of about $1. But again, we're not looking at this level until it breaks this level and then this 118 level. So we're going to have to play it by ear. But in my opinion, overall, I would be patient. I would be, if it's not, again, take what the market gives us, don't force trade. So if it's not a clear-cut picture, in my opinion, sometimes the best action is no action, right? And that's it. So stocks by the numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, like the video, thumbs up, algorithm, share the video. Helps me get more eyes on the channel, helps the algorithm out. And, of course, subscribe to the channel. That is our handshake agreement. I will review any companies you guys might want. I'll do updates on stocks we looked at in the past. And, of course, Discord link in the description if you want to come in, if you want to talk about some short-term trades, or if you just want to BS a little bit. Of course, everybody's welcome. But that link is in the description. And I will do all of this for you guys. All I ask, do me a favor. Help me help you. Push the subscribe button. That is how you help me. But, of course, moving forward, more importantly, like I do always say, I understand that markets are rocky and they're volatile and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll catch you guys in the next one.